Despite the U.S. jobs report producing a much stronger than expected NFP print and uptick in hourly earnings, the market has since been selling dollars and buying stocks. A lot of this is a function of the Fed chair's appearance later in the day on Friday after Jerome Powell appeased investors with comments that leaned more dovish than what he had conveyed at the most recent Fed meeting. Still, while we believe currencies will continue to rally against the buck on the possibility for a complete Fed pause, another U.S. dollar bearish risk associated with White House drama and the administration's protectionist agenda, we think these other USD negative risks will not reflect well on the stock market, which won't be able to do what it once was able to do, racing back to record highs on the first sign of any Fed accommodation. The primary reason is the fact that monetary policy accommodation gestures will never be what they once were, with that tank emptied out and incapable of packing the same incentive to be buying stocks. Another reason comes from what should be worrying overall results in the jobs report. The combination of a push back up in the unemployment rate and jump in hourly earnings is a combination that could have the Fed in a very difficult position of needing to decide between raising rates to offset inflation or keeping rates on hold to help a still struggling economy. This is not the kind of decision that should be a comfort to investors and could easily inspire more risk liquidation. In our special report on Friday, we talked about the good news is bad news dynamic, and we believe that once the market gets past feeling good about Powell's comments, there will be another retreat in U.S. equities. Looking at today's calendar, a lot of the focus will be on the talks that kick off between U.S. and Chinese officials on trade. Headlines out of the UK on Brexit will also start to work back into the mix, with the PM still trying to do what she can to get Parliament to vote on a deal when the vote happens next week, as per the current timeline. On the data front, we get German factory orders and retail sales, Eurozone investor confidence and retail sales, Canada IV PMIs, U.S. factory orders, and U.S. ISM non-manufacturing. That's all for now.